Our next learning objective is to prepare and interpret a cost volume profit graph and a profit graph. The first step in preparing our cost volume profit graph is to prepare contribution margin income statements for various levels of sales. For the Wind Bicycle Company, we'll prepare contribution margin income statements for 0 units sold, 200 units sold, and 400 and 600 units sold. Notice, our fixed costs remain constant at all levels of sales. Our variable cost and revenues increase with the level of activity or units sold, and our net operating income or loss at 0 units becomes a break-even at 400 units, and finally a profit at 600 units. We'll use these data points to prepare our cost volume profit graph. On our cost volume profit graph, our unit volume is typically represented on the horizontal or x-axis, and our dollars on the vertical axis. Our first step is to plot our fixed cost, which you recall were $80,000 and did not change with the level of output. We draw this with a horizontal line that's parallel to our x-axis. The next step is to plot our cost and volume points on our graph and then connect those lines. So the blue line represents our total expense at 0, 200, 400, and 600 units of sales. Notice our total cost line will intercept the y-axis at our fixed costs. If you recall from our cost equation, y equals a plus bx, a represents our fixed cost and will be the y-intercept, and b is our variable cost per unit, which is the slope of our total cost line. Next, we can pick one of our levels of activity unit sales, let's say 400, and plot the revenues for that point and draw a line from that point back to the origin. This line represents our sales revenue line, and the slope of that line is our selling price per unit. Once we've drawn this line, where our revenue line and our total cost line intersect is our break-even point. In the case of the Wind Bicycle Company, that was at 400 units, or $200,000 in sales. Notice, anything above 400 units, our revenue line is above our total cost line, and we will earn a profit. Any level of sales below 400 units, our total cost line is above our revenue line, and the company will incur or report a loss. The vertical distance between our cost line and our revenue line represents our loss, while above our break-even point, the vertical distance between our revenue line and our cost line represents our net operating income or profit. An even simpler form of our cost volume profit graph is simply our profit graph. We can prepare a profit graph by selecting two of our data points and plotting our profit or loss for those 2 points, and then connecting those points and allowing that line to intersect the y-axis. This line represents our selling price minus our variable cost per unit, which is again our contribution margin per unit, times the quantity sold, minus our total fixed costs. Again, our break-even point is where our profit is 0, which occurs where 400 units are sold.